to both Stacy and Jerry.
Hello, good morning, everybody. My name is Gerardo Mendoza. On campus and anywhere has to do work-related stuff, I'm known as Jerry, and I'm the office manager SparkPoint at DVC. Before I continue introducing myself, I want to apologize in advance. I live with 4 Chihuahuas, so if I mute myself during the conversation, that will be the reason why. They get kind of hectic in the mornings. So introductions. My name, like I said, is Jerry. I'm the office manager SparkPoint at DVC, and at the moment, although we do not have a physical space, I'm sharing this space at the Student Service Building Union inside the EOPS office suite. So talk about what SparkPoint is and what we have to offer. SparkPoint at DVC is a community-based partnership designed to help individuals and families to become financially sustainable. With that being said, we provide 3 main topics, which is finance, credit, and career services on campus, and for those within the community as well. SparkPoint Contra Costa has 4 physical locations in Contra Costa County, 1 in Richmond, Bay Point, Contra Costa College, and at DVC as well. Some of the services that we have to offer for our students and those within the community are as follows. We help individuals one-on-one services by offering coaching, connecting them with the proper resources that they need to become financially sustainable, and just educating them and giving them the tools needed for that as well. For individuals that would like to schedule and learn more about SparkPoint services as a whole, within the DVC website as well, we live under the basic needs page within DVC's website. You find my email information in there. And within that link as well, you can also go ahead and schedule one-on-one with me. We have some services that give you a bit background of who we are and what we do as well. With that being said, within the chat, I'll put my name, my email information as well. And just feel free to send me an email if you guys have any questions or comments about SparkPoint. But besides that, I'll go over and hand it to Stacy, who's our financial coach from Better Beginnings. And she offers financial one-on-one workshops as well and helps individuals with budgeting and understanding what finance is and how it helps individuals for the future as well. So Stacy, I'll pass over to you.
Okay, thank you. And let me share my screen. There we go. I want to thank both of you for being here today. I know it's a lot in our busy world. This presentation will not take a full hour unless you have a lot of exciting questions, but which I'm all for, but not necessary. So today's workshop is on financial tips and gaining financial independence. And as we go through the slides, I honestly believe you will see one word or idea that will present itself frequently. So I encourage you to pay attention and see if you know what that word is or can identify it at the end. And okay, as Jerry mentioned, I work for Brighter Beginnings and we partner with SparkPoint, and I have a colleague in Richmond who works with Contra Costa College, Ingrid. So there's a couple of us and we work together coming up with presentations. So I make sure her slide's there, but she's also another coach that we at SparkPoint. The objectives today are going to be a quick overview on these topics. Anything that's deeper will require a one-on-one appointment, and I'd be happy to work with you. But today we're going to go over financial goals, budgeting, savings, and some information on credit. The starting point to any great plan or journey is to know exactly where you are. I'm sorry, I'm having a hard time with my little screen here. Is to know exactly where you are. Having a good idea of what you are currently doing so that you can plan your next steps. Identify habits and behaviors that might need to change or what roads you need to take. Think of when you use a GPS to get to a new destination. To give you accurate information, that GPS needs to know exactly where you are and even what position you're pointing in. How many of you ever experienced a GPS not knowing where you are and giving you really rough instructions? I don't know, maybe it just happens to me, but sometimes it's frustrating, or I'm turned around and it leads to mistakes and sometimes keeps you from moving forward. So first things first, know where you are, then plan. What are you doing for work, school? What is your money doing now? This is moving very slow. I apologize. Okay, here we go. The key to financial independence is determine what you are dependent on and what it will take to not be dependent on it. For example, you may rely on financial aid from school to help you make ends meet. No shame in this at all, but it is what we need during school. So how do we plan when that comes to an end? That is where you start planning on how do you create financial goals. Think about what you want to accomplish. A goal needs to have a purpose. For example, buying a car because you need transportation flexibility for more job opportunities. Or another goal could be start savings because this way it can help cover any unexpected expenses with that new car that you're trying to buy. Some goals will take years, and that's okay. And some of them require smaller goals in order to get there. And part of the process and plan is to remember that not everything will happen overnight. But think about it this way, no matter what, you will still get to accomplish many goals in between. So let's talk about the different types of goals. You've got your short-term goals from now to 3 months, saving $1 a day, enrolling in financial services, finding ways, short-term experience, just figuring out where you can reduce your expenses. Midterm goals, 6 to 9 months or even longer. Improving your credit score, finding ways to figure out how to increase your credit and building up some savings. Long-term can be paying down your debt or buying a car or even having a very, very sustainable emergency savings funds. At the end of it all, remember to always be realistic with your goals. So you don't want to set up goals and then be in a way that makes you frustrated and discouraged because you don't get to them. A classic story for this one is I had a client who was on a fixed income and wanted to save more money in a year than she actually made. So we had to talk about what realistic goals would be. Okay. One of the challenges in creating financial goals is understanding what you're spending. Most people don't even realize that they spend more than what they earn, and then they get slowly into debt. After creating financial goals, how do we accomplish them? You have your destination, so what's the plan to get there? Financial goals are fulfilled by aligning them with your personal budget. The budget is your plan. It's your roadmap. When we do not have a budget, we can't really track exactly how much we're spending. And this is where we can find it difficult to achieve those financial goals. I tell people I started a budget and I was like, I'm going to save $1,000 a month. I'm going to do it. We're going to do it. And my husband said, we're not doing it because you're not actually being realistic with how much our food budget is. And that was kind of like really like a one that we had to go back and really determine, okay, what are we really spending on our food for our family? So that was a big part of learning how our budget was going to work. So budgeting is creating a plan that shows us how we're spending our money. It's important because I can't set goals if I don't know what my money is doing. And sometimes we think we do, it's all in our head, but putting it down on paper gives us a better perspective of what we're doing. A budget can help you make sure that you do not run out of money each month, or as I was doing, dipping into my savings every month because I wasn't taking into account how much I was spending on food for our family. And then it helps me set realistic goals. For instance, in my case, saving money for emergencies. So there's some key things that you need to do is identify the financial facts and the ways to create a budget. So you need to have your monthly income, your monthly expenses, special events. I'm going to give a lot of examples on my family because we're always working on a budget. And my family, my daughters have birthdays both January and February. So let me tell you, December, January, and February, I have to be on it and paying attention so that I make sure that I'm not overspending because I love lavishing my teenage daughters. Let's just be honest, they're teenagers. They have expensive tastes. Making sure that they get what they need or want. Educational investment, whatever money we're putting aside for their funding for schooling, or if in your school now, you need to be paying attention to dates and when does school start and when do you start putting money and when do you have to pay certain bills. Once you've put together a budget, you can identify your goals, you track your expenses. This is a key one that's really important to start on. And that'll help you identify places where you might be overspending. For instance, a very common one is Starbucks coffee. And so how do you fit Starbucks coffee into your budget? And then you can work on creating new habits, maybe only coffee once a week or once a month or whatever works for you. Then you organize your bills and you create your budget. And you update your budget monthly because expenses are different every month and you stick to it. The big thing here is to organize and track, organize and track. And then you can really create a clear budget. And the budget always needs to be, it can always be improved upon. So you want to constantly be looking at what you're doing. It's kind of like money is a tool. And when you're using a tool, you're always making sure that it's doing what you need it to do. You're keeping your tool, like your car. You keep your car maintained. You make sure it's got gas. You make sure it's doing everything you need it to do safely. Money is very similar. You actually have to be paying attention to it. Savings. Savings is a habit of, the habit of savings in itself is an education. Yes, it is very much an education. It fosters every virtue, teaches self-denial, cultivates a sense of order, trains forethought, and also broadens the mind. I also have to say that there's two types of personalities from what I've learned. There's the spender and there's the saver. For some people, saving money is actually very difficult and a very difficult habit to foster. For others, saving comes very easy. It just depends on a personality type. So don't beat yourself up too much if you're not good at saving. It just might be something that you have to practice more than, say, the person next to you. Oops, I went backwards. I don't know why. Okay. Why save? Saving money is about being prepared to take care of your individual or family needs. Saving for emergencies, unexpected emergencies like global pandemics, having a peace of mind, knowing that you have a little bit of extra there in case something should happen. Giving yourself some choices. If you have a sufficient savings, you can have a better, when you're buying a house, you may be able to choose a better neighborhood in which you want to live in, or even choose a better job based on the commute. Save for the future. If you're young, you might want to start saving to start your own business, or the down payment of a house, or your child's education, or even your own retirement. Save to feel good about yourself. One of the things that my husband and I have learned is we very rarely use credit cards. So we've always saved for things, big things like when our TV breaks down and we want to upgrade. We have it in savings and we don't have to worry about taking it out on credit. Not that credit is bad, but we feel better when we pay cash for things like that. So that's just an example. When is the best time to save? Start saving now. And here's the thing, it does not have to be $1,000 a month. It does not have to be $10 a month. If all you can afford is $5 a month, start saving now. Make little changes and you can make a goal. That could be a goal. You're at right now, all you can do is save $5 a month, but you make it a goal that by 6 months, you're saving $20 a month. Okay? It takes practice, but it's really worth it. And the key thing is to pay yourself first. Often people use the 50-30-20 method, and it is a great example, but realistically in California, it doesn't always work out that way. So come up with a percentage that works for you once you have your budget. And again, it is a goal and something that you work up towards. You don't have to start out the door or right out the gate at 20% savings each month. You can start at 1% and slowly work your way to 20%. Okay. So let's get into credit. You're in school, so you know what a GPA is. When you become an adult, your GPA is replaced by your credit score. This is a common thing I hear. I just want to be very clear. It is definitely not a reflection of your character. It is the number that shows lenders how well and how responsible you are with borrowing money. That is all it is. And it is important to keep it at a certain level so that you have better options later on. And everything is fixable. Everything. So credit is your ability to borrow money or access goods and services with the understanding that you'll pay later. Lenders, merchants, creditors grant, even landlords, grant credit or the use of a home based on their confidence that you can be trusted to pay back what you've borrowed, along with any finance charges that may apply within the terms that they provide. So where do you find all this information? In a credit report. A credit report is your complete credit history, including your addresses, where you lived and where you've worked. And it is really important, actually, those two things, because if they're incorrect, it could actually damage your score. Credit bureaus, there are 3 of them, and they tend to have a very not clear way in how they calculate your credit score, but we'll get into that in a minute. But lenders send their information, your information about what you're borrowing from them to these 3 major credit bureaus. Credit bureaus obtain information from banks, finance companies, and credit card companies and other lenders. So they have all sorts of information in there. What is your credit score? Your credit score is reflected. Credit report will reflect your credit score. And basically this pie chart or wheel is the important, how they determine what goes into a credit score. So if you owe a lot of money, your debt to income ratio, I'm sure you guys have heard of that, your debt to income ratio will affect your credit score. The idea is to keep everything in the mix. So few tips. Keep your credit cards at 30% of the credit limit. So if you have a $100 credit limit on your credit card, don't go above $30. Do not take out excessive numbers of credit cards in a year. The recommendation is 2 to 3 max in a year to apply, and try and keep your credit cards open for a while, and also have a mix. So personal loans, car loans, and other things. And then of course, always pay on time. If you can, at least make a minimum payment. Whew. So now that we're done, who can tell me what the central theme to gaining financial independence is? And you can put it in the chat. Any ideas? Planning. Yes, and I will tell everybody how to get a copy. I'm sure don't understand why that slide is missing, but yes, I can tell how to get a credit report too. But planning and utilizing and using your money as a tool. But yes, being responsible, which means planning and saving. Yep. And there are places online where you can get your free credit report. And the best one is www, and I'm going to put it in the chat. You can either get your annual credit report from that website, and make sure whatever you do use is free. You can also use SparkPoint. We have a credit coach here who can pull your credit score and your credit report and go over it with you for free, and it doesn't actually impact your credit score. Believe it or not, if you check your credit score too many times the wrong way, it'll affect your score. So at SparkPoint, we do individual coaching, which is awesome. I love working with folks and helping them figure out their financial goals, and being a cheerleader as well as a guide and resource to helping you reach whatever your goals are. And so I put the link again for DVC if you want to sign up and meet with the coach. Does anybody have any questions? I'm going to stop sharing my screen. If anybody has any questions, I would be happy to answer them.